Bitcoin is reinventing a lot of things, but it's reinventing finance. It's reinventing the way we think about that. Obviously, a lot of it because of the returns, the way the collateral works. Is this reinventing sort of this market and creating this new market, or is it only kind of the same old playbook with this new asset? And the reason why I asked that is because I see a lot of TradFi guys, the CNBC guys, et cetera, a lot of guys on Twitter who just can't seem to grasp this.
Yeah.
And this has to be the biggest bubble, the biggest Ponzi in the world. So what are they missing? Is it being reinvented, or what is it that they're missing? Or is something so new they just haven't caught on yet?
So I want to say two things. One is, I don't know what the number of hours is now, given that Bitcoin signal's pretty strong, but it's still probably 100 hours.
1,000.
Maybe 1,000 to get like conviction about Bitcoin. But like if you were only reading the right things, you could probably get pretty close, I think, in 100 hours of focus study.
Yeah.
The incremental 10 or 20 that you need to understand the leveraged Bitcoin equity strategy is on top of having conviction on Bitcoin in the first place.
Right.
Otherwise, you just
and some underlying business finance.
Sure.
As well.
Yeah. Then there's a bunch of other things. That's assuming that you come from TradFi and already have that background and understand converts and options and delta hedging, gamma hedging, volatility smiles, like all the different things that you need to kind of understand. You would still need to get over the hump on Bitcoin to really get in. But the second thing I would say, and we were kind of talking about this in the pre-show, institutions that got into Bitcoin before this MicroStrategy pump in the fall and after the election and everything kind of opted in. They didn't have to, right? It's like, okay, Larry Fink saw the opportunity and Abby at Fidelity saw the opportunity. The Vanguard and Schwab's didn't see it or didn't want to make the play. Buffett didn't want to make the play. Nothing was dragging them kicking and screaming into Bitcoin. Mm-hmm. If you currently are a convertible bond hedge fund or a bond desk and you're not in this trade, you're getting absolutely crushed publicly and embarrassed by your competitors that are in the trade. And so, I was just out in New York and hosted an event last Monday. It seems like forever ago. This was 9 days ago. And, usually when you interface with TradFi about Bitcoin, you might sort of call 10 people and get 2 to show up. In this case, we called like 10 people and 30 showed up.
Wow.
They brought friends and the friends brought friends. And we had one of the big IB's whole convert desk came, and, a couple of the analysts came from another bank, and, a guy that runs 300 bankers at Goldman came from the markets group. And they're all there asking about Bitcoin. And thank goodness we had 5 or 6 people that knew enough to kind of, be the center of the semicircle in these groups. But the reason they're there is they're getting dragged kicking and screaming into it. They can't not be in it. They have to know about it now. It's not optional. For real, for institutions. So the way I see it, this red wave with the election, this sort of more and more people who have credibility on Wall Street and in TradFi actually having done the work and understanding not just Bitcoin, but also this LBE playbook and gaining conviction on it and being able to explain it with the credibility of their resume and the schools they went to and the jobs that they've had to people that look like them. Mm-hmm. That's institutional adoption.
Yeah. One thing I had this presentation I gave at Bitcoin Mina 2 weeks ago, I think, I talked about this evolutionary process and mapping Bitcoin's adoption cycle over a 50-year period. And I talked about how the seeds of institutional adoption came early, 2013, VC started coming in, 2017, Fidelity came in. So it came. So we've been, and then the CME, CBOE futures came in 2017. Yeah. So institutions were coming. But it's not really until now. So the seeds were there, right? But 2010 to 2020 was more like the frenzy. That was like retail. 2020 to 2030 is then like this institutional piece. And we're seeing it, right? So now front and center. For like a company like Swan Bitcoin, you're not a publicly traded company. You don't have the options like this. How do you think about applying and if you don't want to give us proprietary secrets, but how do businesses think about applying Bitcoin to their businesses, their balance sheets, things like that, if they can't play in that type of a market?
Yeah. So, for us, we do have a Bitcoin treasury and we have a Bitcoin treasury strategy, and we talk about it with the board and we set rules and we accumulate Bitcoin over time. And, you know, the goal, as I've often stated publicly, like we do intend to be a public company, and there is a very strong rationale for doing a flavor of an LBE playbook as a public company. If you're a company like Swan,
Right.
It kind of makes sense. You know, you would have, Swan shareholders would be natural clients, just like we have a lot of MicroStrategy and similar shareholders who are Swan clients for all of their other Bitcoin needs, whether they want, to buy real Bitcoin or custody it or collaborative custody or IRAs or whatever. So that synergy is definitely there and has a logic to it. And then we obviously need to be up to speed on this for all of our company clients, because we have over 2,000 business clients at Swan that we serve that are stacking, for their balance sheet. And so, they're looking at this for, okay, what parts of that LBE playbook can I apply to my business? Okay.
So then are you trying to kind of consult them and help them a little bit?
We do every day.
Nice.
Yeah, we do every day. And we've been doing that for years. We've had business clients since early.
Are they also being dragged into this kicking and screaming? Meaning they see, it's like the gunpowder analogy, right?
They're doing it optionally.
Optionally.
Yeah. The gunpowder analogy, which I'm sure a million people have tweeted out recently, but it actually applies now for real. I think is very applicable to these people that are in the convertible bond business. And as we saw this morning, MicroStrategy is going to issue normal corporate debt, fixed coupon debt, probably in January.
Yeah.
So that's a much, much, much bigger pie. It's 100 times bigger than the converts.
Yeah. I launched a company called Matador.
Yep.
In the Toronto Stock Exchange, the venture exchange, went live trading Monday, a couple of days ago. So we raised a bunch of money for Bitcoin, and we're deploying a similar strategy.
Nice.
We're hopefully a little micro play off of that. So we're hoping to kind of maybe get to those markets as well.
Sometimes those percentage gains on the small guys, as you've seen with Metaplanet and similar.
Yeah. So we're like a sister company with Metaplanet. So we have a lot of data going back and forth, but we're hoping to basically deploy the same strategy here in North America. So it's pretty exciting. Okay. So yeah, it's changing everything. Now it's in the 100, the NASDAQ 100, right? I mean, and so the world of finance is very competitive.
Yes.
Is kind of what you're saying. And the reason why they're being dragged in kicking and screaming is because they're getting smoked by companies that have applied this strategy. Mm-hmm. And so because it's so competitive, the gunpowder analogy, if you want to compete, then you have to do this. That's the game theory. Yep.